Hey everyone, this is Will Ward, loan originator with Prime Lending, and this is your monthly market update for April. So lots to talk about in this month's recap from real estate news, stock market movement, mortgage interest rate trends and economic indicators, and also briefly touch on some market projections as we find ourselves rapidly approaching summer. So according to data released by the National Association of Realtors this morning, March existing home sales increased 4.4% to the highest pace in over 10 years. So the market consensus was for only a rise of 2.5% month over month, so the numbers this morning were definitely stronger than expected. Nationally, there were 1.83 million homes for sale at the end of March, which is still nearly 7% lower than a year ago. So national housing inventory ended the month unchanged from the previous month, the 3.8 month supply. So at least nationally speaking, the housing market has definitely managed to pick up the pace, even with ongoing inventory struggles, and sellers in most markets certainly continue to be happy campers. So from a more local perspective, St. Louis City and County saw the median home price rise 7% year over year for March to $160,000, with the average days in the market continuing to decrease at an average of 92 days for sellers. Housing inventory is slightly above the national average in St. Louis City and County of 4-month supply. So just as a reminder, a figure of 6 months of inventory represents a balanced market, equally favoring buyers and sellers, with less than 6 being identified as the seller's market, which we're currently in right now, and north of 6 being a buyer's market due to an oversaturation of inventory and low demand. So it's certainly been a while since we've seen those kind of inventory levels above 6 months supply. So over in St. Charles County, the year-to-date median home price rose nearly 7.5% to $204,000 compared to this time in 2016, with the year-to-date median days on the market for sellers coming in at a blistering 18 days. So to top that, for the 625 sales in St. Charles County just for the month of March, the average days on the market for those sellers was 11 days. So I speak with a lot of local realtors in the area, and these numbers absolutely back up the notion that buyers in St. Charles County are feeling the squeeze of the inventory shortage, and it's more important than ever to be fully prepared to take action when you enter the market to buy a home by having all of your finances lined up and your home loan qualification completed. So as a home buyer, by not being prepared, you'll get beat every time by those more prepared and ready to take action than you by having their home loan qualification in hand. So if you're even thinking about buying a home this summer, I'd highly encourage you to reach out and start reviewing your home loan options today, and I guarantee it's going to save you time, headache, hassle, and lots of heartbreak down the line when you get beat out on your dream home. So for my friends, clients, and colleagues in the Kansas City metro, the average sales price for new and existing homes increased more than 8% year over year for March, with the median sales price coming in at about $180,000. The average days in the market fell to 65 days for the KC metro as a whole, and total housing supply at a figure of 2.1 months, which is significantly below the national pace of 3.8 months I mentioned earlier. So as you can see from this historical average sales price chart, the consistent rise in values in the Kansas City area since 2012 is pretty impressive. So if you happen to be one of the buyers that entered the real estate market looking for a home back in March and still haven't found anything as of today, you'll certainly be pleased with the direction mortgage rates have headed over the last few weeks. So according to Freddie Mac's weekly primary mortgage market survey, the national average for the conventional 30-year fixed-rate mortgage ended the week below 4% for the first time since November, and down more than 0.1% from last week's number of 4.08. So back in mid-March, the national average was at 4.3% for the 30-year fixed rate according to Freddie's data. And we've seen consistent declines over the last 5 weeks to the 3.97 mark that ended this week. So the stock market has also continued to perform fairly well over the last few months, and it has begun to taper off and level out with a few market corrections recently. But the NASDAQ composite is up about 9% for the year, while the S&P 500 index is up roughly 4% year to date. So still some pretty good returns there. Now as far as the bond and mortgage interest rate markets go, it certainly appears, at least in the short term, that a market correction has taken place recently to offset the blistering rise in yields that was seen in the first few months following the election. And at least for now, we like what we see. So the Federal Open Market Committee meets again in May and June, and with one rate hike already seen earlier this year, it's definitely still anticipated that another one could be in store in June, though with a couple more months of economic data to be laid out, if trends do start to cool off, the Fed may decide to hold off temporarily. Economic indicators do still look strong through March though, especially the unemployment rate, which dropped to 4.5% for the month. So if mortgage rates do continue to rise throughout 2017, it could start to begin to put some pressure on home values as home affordability is going to begin to decrease. So needless to say, It'd be nice to see inventory levels rise to give home buyers more options and less pressure on the market. We've been saying that for 2 years now, so we'll wait and see what happens. So looking forward in the short term, it's certainly looking like we'll see more of the same pace of play in the real estate market, with days on market and housing inventory at all-time lows and prices continuing their upward trends. So that's pretty much all I've got for today, guys, for this month's update. Thank you to everyone for turning into these market updates. The feedback that I've received has been outstanding, and I hope that I'm able to shed some light on a variety of topics that reach much further than just interest rates. So if you or anyone you know may be thinking about jumping into the market, I'd love to hear how I can help you map out your path to home ownership by focusing on your wants and needs and to put you in the driver's seat to accomplishing your goals. For those looking for down payment assistance in this market, I can definitely help you out there, as I'm an MHDC certified lender in Missouri and can walk you through the process and save you thousands. So give me a shout to learn more. If you're also in the search of the right real estate agent, let me know and I can introduce you to a local expert. And message me directly here on Facebook with any questions or give me a call at 314-529-3688. Thanks, everybody. Have a great weekend.